Perception is strong and sight is weak. In strategy, it is important to see distant things as if they were close and to take a distanced view of close things. Miyamoto Musashi. My friends, let's break that down. Perception is strong, sight is weak. Now, we improve our perception by the amount of time that we spend in the markets each and every day. I think 10 to 15 minutes is adequate. And again, you can do all your reading and studying and everything else in addition to that, but it is important for you to develop your perception, to develop it strongly, and you do that by spending time in the market every day, not 3 hours on a Sunday or 4 hours on a Monday, but each and every day for just a few minutes. Sight in and of itself is weak. You have to develop that perception. In strategy, it is important to see distant things as if they were close and take a distanced view of close things. Absolutely. That's why we use multiple time frames, so that we are able to zoom in on what is happening distantly. Now, distantly is that weekly trend. Why? Because all things being equal, the market tends to move in the direction of the largest chart, which is our weekly chart. So it is extremely important for us to make sure that we are paying attention to what's going on in that distanced time frame, and then to take a distance view of close things. Don't let that half-day chart fool you into thinking that everything is going down now just because the half-day chart is. Again, pay attention to what Miyamoto Musashi teaches us and take a distanced view of close things and a close view of distant things. Okay, let's jump into these charts. We see stocks are up, gold is up, Bitcoin is up, and bonds are down. Let's see where things are leading us, what's going on. We're looking at this half-day chart first. We can see where the STC, that is our prime indicator. Remember, it is a combination of the MACD and stochastics. And we see that it is at the top and flat moving along. We can see that we've hit that 200 EMA exponential moving average, and it may be thwarting us for the moment. We'll wait, watch, and see. We look at where we are on the 2-day, and of course, things bounced off that back a few weeks ago. Most recently there, that 2-day candle for the 13th of December moved down, then sideways. And over this last 2-day candle, really booting up for the day 0.70%. Still red on the STC. Now on the weekly chart, and you can see where the weekly bounced off. Isn't it interesting how that 200 EMA so many times is a point where we bottom out or penetrate some and then pop back up through, bounce off of. So that is curious. We saw it move up for many weeks, then down for 3 strong weeks, well, really 2 strong weeks, and now is starting to move back up again. So we will pay attention. Green on the STC, again, waiting for things to sort themselves out so we might be able to fashion a trend and jump into it. Okay, let's look at where we are on the Q. Still way below the 200 EMA on this half-day chart. Different than the Standard & Poor's 500. A lot more negativity in the NASDAQ 100, the tech stocks. So we see things not reaching the high that we reached just a day ago. Again, up 0.85% for the day, but struggling along. Lots of indecision in the morning, moving up some in the afternoon. Green on the STC. We look at where we are. And again, well below the 200 EMA here. We again slid sideways like the STC, and we're moving up on this latest 2-day candle. Still red though on the STC. Where are we on the weekly? Flat on the STC at the top in green. We're below the 200 EMA. 1, 2, 3, 4 weeks of down movement. Really 3. This last week didn't tap the bottom before. But now we've gone from red to green as far as candles go, still below the 200 EMA. So more negativity there on the NASDAQ 100. We'll see how these charts sort out and where they lead us. Now, where are we on 20-year bonds? 20-year bonds have gone up and hit the 200 EMA on this half-day chart, and then move down below it. Still green on the STC. Not enough down movement at 1.66% because of all this prior up movement to kill it and have the STC go down, but that could be in the cards. Now, if that does happen, we're below the 200 EMA, aren't we? We'll be paying attention to that. Where are we on the 2-day? Just went green, okay? After some red down movement on the STC, it just went green. Now, do pay attention. We're well below the 200 EMA, aren't we? So we're in that negative territory. We will be paying attention to that. What about the weekly chart? It too is well below. I really have to pare this down. Well below the 200 EMA there. But as we look at it, 2 prior weeks of down movement, and then last week, where we had 2 weeks, again, recently of down movement. Last week, green spinning top. This week, gaining some. So again, not reaching anywhere near the high that we saw back on the 5th, the week beginning the 5th of December. Still green on the STC, but as we know, we're quite in the negative downtrend as far as being below the 200 EMA. So we'll continue to watch, keep our eye on things, and just see what is going to happen. Now, if we jumped into a down move because the half-day chart rolled over going down, what does that mean for us? Well, we're green on the STC, so that's 4 points on the success multiplier formula, and we're green on the weekly chart, so that is 10 points. So we have a positive 14 if indeed things roll over going down on the half-day chart. So that doesn't bode for a lot of, hey, I'm going to put a lot of faith in a trade going in the opposite direction of those bigger charts. Now, it could be that things have topped out on bonds and we've hit the top. But just watch, wait, learn. I encourage you to practice trade it if that occurs, but see what happens. That's why we say you've got to learn the minutia. And you only learn that by being in the market each and every day and practicing these things. And again, making sure that when you do jump into a trade, you list the reasons why and you follow that trade to completion, either success or failure. And then you learn from whichever way it went. Let's move on to gold. Gold up 0.37%. Gold just keeps on moving up, doesn't it? Above the 200 EMA, we've topped out as far as the green goes there with the STC. And again, gold, really, we can see where it actually topped out, hit its high of highs back on Monday, the 9th, down a little bit in the afternoon, popping up in the morning, but not getting higher. I do not believe it. Look at the high, 174.98, 175.04, so not quite as high. Are things topping out? Is gold getting ready to move over down for a little while, catch its breath, and give us maybe an opportunity to jump back into a gold trade? Don't know. We'll wait, watch, and see. What's up with the 2-day? Just like the half-day, it's green on the STC above the 200 EMA and a nice big green up candle. You know, candles much bigger than the wick. That is beautiful as far as up movement goes. What about the weekly? It too is above the 200 EMA. You can just see it barely at the bottom of the screen. There it is. And of course, nice big up candles, particularly this week and last week. This week's candle even nicer. Very little wick on top, just the candle itself. Up at the top there on the STC. So gold is golden. We waited a long time for that to occur, didn't we? Where are we on Bitcoin? Up for the day, 1.94%. We look at that weekly chart. What does it show us on Bitcoin? Well, it shows us that, again, up for the day, 1.92%. What does that mean for Bitcoin? Still struggling along a bottom there. Still hoping that Bitcoin will find some footing, will end up, really getting ginned up at some point, but waiting for market capitulation, most likely. When people just give up on it totally, everybody writes it off, just like market capitulation always is, and then you'll probably see some signs of life. People say there's more to come, As far as the dropping goes, maybe that's it. We're below the 200 EMA, of course, on that half-day chart. And on the 2-day chart, again, we can see where we've just been sliding along. That is where we are as we end the day on Tuesday. Get ready to head into Wednesday. So appreciate our Patreon supporters. You appreciate what we do here at the channel. Please support us. Lots of great stuff for you, particularly the things that we put out for you on a weekly basis, the weekly vertical crossovers, of course, the once a month question and answer session we do for all of our Patreon members. Oh, the 3-part series, Options Made Simple, the Charting Wealth Way. You want to learn about options? Join, become a Patreon supporter. We send those trainings to you immediately. Good stuff, so you can start practice trading options immediately and have a semblance of an idea about what you're doing. It's loads of fun. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.